Picture a crypto price chart as a mountain range, peaks and valleys everywhere. A trend line is a straight line connecting either the price lows or highs over time, revealing the market's direction. It cuts through the chaos, making it easy to spot if prices are generally rising, falling, or moving sideways. Drawing a trend line is as simple as connecting the dots. No fancy tools needed. Steep lines mean strong trends. Flatter lines mean slower moves. Trend lines help traders and investors see the big picture and spot opportunities or risks early. They're not just for pros. Anyone can use them to make sense of crypto charts. Mastering trend lines is a key first step to reading the market with confidence. By learning this skill, you're building a solid foundation for more advanced analysis. There are two main types of trend lines, uptrend and downtrend. An uptrend line connects higher lows, acting as a support level, like a floor where buyers step in. A downtrend line connects lower highs, acting as resistance, a ceiling where sellers push prices down. The angle of these lines shows market momentum. Steeper means stronger moves. Support and resistance help traders spot entry and exit points. Buying near support or selling near resistance is a classic strategy. These lines define the battle between buyers, bulls, and sellers, bears. Prices often bounce between these boundaries until a breakout happens. When price breaks a trend line, it can signal a major shift in direction. That's when big opportunities or risks emerge for traders. Let's see trend lines in action with Bitcoin's surge in late 2024. After breaking its old resistance at $73,800, that level became new support. This shift confirmed a bullish trend, and Bitcoin soared over 50% to a new high above $109,000. Throughout the rally, an upward trend line connected each higher low, guiding traders. As long as price stayed above this line, the uptrend was strong. Dips to the trend line became buying opportunities. Even now, analysts watch Bitcoin's support line to gauge the bull market's strength. If price bounces, the uptrend continues. If it breaks, momentum may fade. This real-world case shows how trend lines help traders navigate volatile markets. They turn chaos into clear signals for action. While Bitcoin climbed, Ethereum faced a downtrend after peaking above $4,100. A descending resistance line kept pushing ETH lower, showing sellers in control. For a reversal, ETH needed to break above this line. Until then, rallies were selling chances. XRP, meanwhile, broke out of a 7-year triangle pattern in late 2024. The breakout triggered a 283% surge, proving the power of trend lines in spotting big moves. Now, analysts use those lines to set future targets. Ethereum's resistance and XRP's breakout show both sides of trend lines, barriers, and launch pads. These patterns define the market's turning points. Watching them can reveal when a trend is about to change. Trend lines are powerful, but not foolproof. Always look for at least 3 touches to confirm a line's strength. Combine trend lines with other indicators, like RSI or trading volume, for better signals. Never rely on a single line. Markets can break through unexpectedly. Practice drawing trend lines on real charts to build skill and confidence. Observe how prices react to your lines before making trades. Use trend lines as guides, not guarantees. With practice, you'll turn this simple tool into a smart trading advantage.